doing this trade. Why I sold my Nike position and went all in on Salesforce. I've just sold my entire position in Nike at a loss and moved everything into Salesforce. And no, this isn't an emotional move. It is a calculated decision to swing trade, one of the cleanest setup that I think right now is on the market. And I'm using LEAPS option to take advantage of that swing trade. Let me walk through my fundamentals, the technical setup, and exactly how I am structuring this trade. Welcome to Smart Investing with Philippe. And please, if you like this video, subscribe, like, and comment below. Let's get into it. Let's be honest, why I sold my Nike position, because this trade was not really working out. I bought Nike at $75 thinking the consumer recovery and the brand turnaround will kick in, and it didn't. No growth happen, rising tariff, no real innovation for Nike shoes. I'm going to shop to see what's new and so on. This is always the same thing happening, and I was down 20% of my trade. So at some point I have actually stopped hoping that Nike will recover, and I've decided to sell my position and reallocate all the investment into a new position. So I cut my loss of Nike and looked at a high conviction name with actual upside, which I decided was CRM. So why Salesforce? Salesforce checked every boxes for me. On the fundamental, it delivered a strong earning beat for $2.58 versus $2.37 expected on the last earning. Revenue were up 8%, guidance were raised, strong free cash flow, recurring revenue model, deep push into AI with Agentforce, and real adoption throughout the Salesforce community. Technical setup was also very strong for me. The stock dropped from $362 to $260, now sitting on major long-term support, and it consolidated for days and no more seller was seen on the stock right now. So this is a perfect zone for a rebound and low downside risk and high potential return. So let's look at the chart to explain you two of my move. So if you look at Nike, okay, this is my setup of Nike. You can see I bought Nike at 75. Because why I decided to buy it at 75? Because it was trading sideways from actually June 24 to March 25, almost for 3/4 of a year. It's trading sideways, consolidating. So I thought like, this is it. I'm going to take a position in Nike and just play the rebound. But actually, all the discussion with the tariff and also the decision to change the CEO of Nike and the change of strategy and so on. So basically, a lot of uncertainty kicked at the same time for Nike, and it went from 75 to the low of 52, which was a downside of about $30 at some point. So I was waiting for Nike to rebound. So it rebounded barely from 52 to now 63, but you can see it's trading sideways since the 12th of May now. We are the 5th of June, is still trading sideways, and I don't see a lot of upside for Nike on the very short term and on the medium term. So I decided to cut my loss of 20% in Nike. And I just decided to reinvest it into CRM. CRM, I explained to you why. I think it's a safe technological play, and the technical setup was quite interesting. As you can see, it went down to the low of 239, 240, which was the previous support back in 2024. And you can see that from the beginning of 2025, the stock already corrected by close to 40% on the low of April, and it rebounded from the low of April of 240 to 200, around 260. We know that the earnings call has been very, very good. The market reacted negatively because of the acquisition of the company, and the market reacted quite negatively with the acquisition of the company. Sorry, the market reacted quite negatively with the acquisition of Agentforce because they wanted to strengthen their position into AI. So basically, I think it was clearly overdone, and you can see on the chart here, they use a huge volume on the buy side on that day when the market actually collapsed to 254, and it rebounded on the same day to the level that we are today of 269. So I think 269 is also very close to the pivotal, to the point of pivot. This is where you have the must buy volume on the chart. Technically, I think this is the ideal point because we are actually very close to the point of pivot. The highest volume of buy has been around the price that we are right now, about 262. And I think there is at least a potential to rebound to the 200 moving average, which actually it did from the low of April. So it's not uncommon that you see that the market rebound to the 200 moving average and then retrace back 50% on the Fibonacci. I haven't checked, but I'm sure this is about 50% retracement on Fibonacci. Let me check. Pretty sure about that. Yes. You can see smack onto the 50% Fibonacci, and it will run from there to, I think, the level of resistance of the 200 moving average. So my strategy basically is to play the rebound up to 300 and just liquidate my position. So if I do that, I will get an upside of about 12%, but because I'm using LEAP option, I have leverage of 100%. So that's about 24-25% in a swing trade. So I could do that. I could close my position at 300, or I could sell a call to do that, Sarah. So that's my technical setup for CRM. And actually, if I do that, I can recover the loss I'll make on Nike, because Nike, I made a loss of about $3,000. And here, because I have a leap of about $14,000 with an exposure of $27,000, then I could make about $3,500 on the trade. As I explained it to you, the trade structure is very easy. I bought a leap option call options on Salesforce with a strike price of 130, expiration of December 2026. So I have enough time for the trade to set up. The delta is around 0.90, which means that I capture about 90% of the stock movement. And I paid a premium of about $140. So I invested $440 to get an exposure of about $270, basically, the double. So if Salesforce bonds by 10%, I recover my entire loss on Nike, and I actually break even on my loss on Nike. I believe that it's going to go faster with Salesforce rebound than waiting for Nike to recover a 20% upside. So I could sell a covered call option right now just to recover my loss on Nike with an horizon up to January 2026. But I'm not doing that because I believe there is a strong recovery in the short term. So if I sold my call right now, I will have to keep the position up to January, and I will actually cap all my upside. So I have the option, or actually, that the stock goes up to $300 and not close my position. And I got the option to sell a call option when it reached the level of $200 and just keep the leap option up to the end of 2026 and play the full upside of CRM, maybe to the all-time high of 370. Or I can just basically close my position at 300. And that's it, you know. I'm actually have a lot of flexibility to play this trade quite properly. So what I'm actually trying to explain to you with this trade is that sometimes it's better to close a loss and just switch the money, the full money, into a new position, and that you think you're going to go faster to recover your loss. And it's basically a switching from a broken thesis with Nike to a higher probability setup with Salesforce. Salesforce is not a moonshot like Palantir or IMS. It's a safe tech with leverage and clear upside, you know. So I'm not trying to speculate or whatsoever, because I look more for a smart asymmetric setup in the market. So if you want to see all that trade develop over the coming months, then stay tuned and subscribe to my channel, and you're going to see how you can make a very, very profitable swing trade on a very short-term basis. So let me know into your comment if you are into CRM stock right now, and if you know how to play the LEAPS options, and if you play this type of short-term swing trading setup with LEAP option as well. So what I can show you right now is also my account. Hold on. So you can see clearly the trade that I've done, so you can have a clear idea that This is not just for talk. This I've done actually this real trade. So you can see all my trade that I've done. So you can see this is not a hold on. This time SD, yeah. So this is all my trade that I've done lately. So you can see this is not like a fake strategy, or I'm not doing what I'm telling you to do. You can see the trade right here. So you can see clearly that here you can see I bought a leap for $14,000 400. So that's mean I bought one call option leap with a December 18, 2026 maturity and a strike of 130. So it's about half the price of Salesforce right now. So I got a leverage of 100%. So for an exposure of $14,400, I got a real market exposure of $27,000. So I got 2 times leverage. And then you can see I sold my Nike position here for an amount of $12,370 for $61, and I bought them at $75, which basically it's a loss of 20%. So I lost more or less $3,000 on my Nike position, which I aim to recover with my LEAP string trade option strategy of CRM. It's okay. I hope you all understand my strategy with my portfolio. So this is quite an interesting strategy for people who wants to tactically change the portfolio positioning and actually recover faster a loss. So let me know in the comments what you think about CRM, and if you use this type of strategy. And don't forget to subscribe so you can follow this swing trade over the coming months. I think we're gonna be in a profit. I think probably in 1 month something I will recover all my loss of Nike. That's my bet. And let's stay tuned if you want to see if I'm right or wrong. So thanks very much for watching. Subscribe and stay tuned for the market update after the market today